We are in the thick of earnings season, and we have an earnings candidate that's in focus today, and that is SIS. That has posted its strongest growth in 5 years. In fact, all verticals have hit all-time highs. The stock right now is mirroring the market right now, not doing very well. It's reeling under pressure of 0.5% right now. But we're joined by the management to give us more on what's the way forward for the company. Vineet Toshniwal, President SIS, is now joining us. Hello, Mr. Toshniwal. Good afternoon to you, and thank you so much for taking the time out. You've delivered your highest ever quarterly revenues of 3,759 crores. That's an uptick of 15% on a year-on-year basis, with all the segments hitting a record high. What were the key growth drivers this quarter, and how sustainable is this momentum going into the second half?
So as we've been guiding the market continuously, our industry is on a secular growth trend, right? We have, if you see our last 10 years CAGR, we have grown at 15% CAGR. And going forward, we continue to grow almost 1.5x the nominal GDP of India and the major market, Australia, that we are present. So we're very, very confident of the growth momentum going forward. The margins did take a beating in the last 2-3 years because there was a lot of contract rationalization that had to be done, and the portfolio mix had to be changed. I think that job is completely over, and we have now come to very steady state margins. Our India security business, which is the leading business, operates at 5.5% margin, which is at the highest band. The facility management business, for which the margins have recovered significantly, is now 5.2%, and the international business, for which the margins had dipped actually because of some one-time charges, is also now back, coming back to normal, though not yet fully back to the normal trend, but yet it is at 3.3%. So this is very, very sustainable, and we actually foresee improvements as we go forward.
All right, so you do see improvement going forward. Hi, Mr. Toshniwal. This is Kanishka also joining in. You know, we have spoken about the overall picture, but wanted to get some light on the segments. Now, both India security and FM segments, they've shown double-digit growth this time around, right? So could you break it down for us? Where is the biggest traction coming from? Is it renewals, new contracts, or pricing tailwinds that you're facing?
So mostly the business is coming from new contracts. The wage growth post-COVID has been very, very tepid. Earlier, the wage growth used to be 7.5–8% year-on-year, the last 2 decades historical track record. But post-COVID, the wage growth has kind of come down to 3.5 to 4%. So the growth we are showing right now is all coming from new business wins. Security obviously continues to be our strongest vertical, in which we are the market leader, and we are like twice the size of the nearest competitor now with the inorganic acquisition that we are folding in. So we will continue to see very strong growth going forward as we consolidate the market. FM, the market TAM, the target addressable market, is actually very large, and we are starting off on a lower base. So we expect very strong growth even in the FM vertical also going forward.
Right, Mr. Toshniwal, you have also closed the AP Securities deal, which is expected to add another around 70% to your India Securities run rate. How soon do you expect the operational and margin synergies from this acquisition to start reflecting in your numbers?
So AP Securities was probably the 5th largest company in India, and it fit in very well with SIS growth plans to consolidate our market share. Our market share right now, pre-acquisitions, is about anywhere between 5 to 6% of the overall market size in India. And as part of our Vision 30, we would like to take it to double digits. So we've added AP Securities, which brings in complementary client set on BFSI and manufacturing sector. And it will add about 17–18% to our top line. Now, as regards margins, they are at margins which we will consolidate starting October 1st. So we will what we know is their historical margin of approximately 4.2 to 4.4% EBITDA margins. But once we consolidate, we'll actually know from this quarter onwards the exact margins that we are adding. Only then we will be able to guide the market.
Right. But apart from that, your international security business, that has also seen a good growth of about 19% on a year-on-year basis, which actually marks its strongest organic growth in a long time, if I understand correctly. So just wanted to get your, perspective on if this growth pace is sustainable really, and what's the long-term outlook on margins and revenue growth as well, as far as the overseas business is concerned.
Okay, so international, this has been one of, probably I would say one of years. You don't get such good years every year, okay? So we won't say that this kind of growth rate can continue in a market like Australia. We've had some massive wins like Defence Australia, Sydney Metro Trains, Canberra Airport, etc. So obviously this year the momentum was very strong, but our international business has been rock solid. And it has continued to grow at about 7.5% year on year. So we expect that same trend to continue going forward. The margins did take a slight beating in the last 6 months because we had to take a charge in one of our subsidiaries. Now that is behind us and the margins are on the path to recovery. And right now it's at about 3.3%, but the historical trend line has been about 4.3%. So we expect the margins to hit 4 plus in about 6 to 9 months' time.
Okay, Mr. Toshniwal, also you've called FY26 a rebound year with all the engines firing. What's your outlook for the rest of the year? And could you share an update on the Cash Logistics IPO and its expected timeline?
So for the rest of the year, we continue to see very strong growth momentum. In fact, historically, our Q3 and Q4 have been the strongest. Essentially, the international business obviously contributes a lot because it's a event season in Australia and a lot of action happening in the international market in New Zealand and Australia. So international business continues to be strong. And then obviously in India, in the economy, the quarter H2 of the year is always strong. So we expect the H2 to be far better than what H1 was. So overall, I think we will continue to grow. I can't exactly guide the numbers, but H2 will be far better. And in H2, we will also be consolidating the AP Securitas acquisition. So that will also add to overall numbers growth.
All right, so H2 likely to be far better than H1. That's the word coming in. On that note, Mr. Toshniwal, we'll let you go. Thank you so much for joining us today and helping us with that outlook.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.